Let's talk first about the dollar index. So I'm going to go to a daily chart here, and I just want to recap what we saw happen last week. Last week was really not a great week for the dollar index. You can see 4 out of 5 days of the last 5 days have been very, very red. And starting today, we're starting to see red again. So what's going on with the dollar index? Is this just going to head lower, and is this 105 area doomed for failure? Well, I think it's a little too early to call that. However, we have to accept what's going on here. We got a couple things that did not bode well for dollar strength. I'll list a few. The easiest one is Friday's jobs numbers came in lighter than expected. Still seeing jobs growth, but much less than expected. I added a chart, by the way. Check this out. Edgefinder friends, check this out. Go to your labor market data, go to NFP, and scroll down. I added this little chart this morning. Just thought this was kind of useful. So this is the actual minus forecast in terms of jobs in thousands out of the US. So what I want you to see in this pretty chart that I spent this morning building for you guys is look at what we saw, preceding this latest data. We had 5 consecutive months of beats. Now, remember, this number is taking the actual number that came out for jobs, NFP, minus the forecasted amount. So you can see that for 5 straight months, we had hotter than expected prints out of NFP, and these were strong beats. Really, really strong labor market. On Friday, guys, we got our first miss in jobs, and the market was very happy about this. Now, the dollar index did not like that, right? The dollar index hated that. Cutting a five-month streak of better than expected jobs, the dollar index sold off. But I want to warn you, before we get overly bullish or overly bearish about anything, this happened once before. We had a miss in jobs, despite a really incredible month reported in October for September, right? Remember, when we get each month's numbers, they represent the month before's data. And then in November, we got October's data, which came in very, very light. Well, not only that, the market got really excited right around here, and then proceeded to see 5 consecutive months of higher than expected jobs data. That being said, we missed by 63,000 jobs. That's a pretty substantial miss. And in fact, going back all the way over here compared to forecasts, that data that came out Friday, to the bears' credit for the dollar index, that was the biggest miss that we've had in over a year. So I don't know if anybody likes this chart, but I thought this was useful. If you're an Edgefinder user, again, you can find this by going to NFP and just scroll down. We can now see the actual minus forecast, and these, of course, are in thousands. Thought that was kind of an interesting chart, and yeah. Let's push on. So what does this leave us with? Okay, well, you have light jobs data. Okay, cool. The dollar index comes sliding down on that data. Not only that, Jerome Powell had a couple opportunities to be hawkish in his meeting, the press conference. He didn't really have a huge hawkish sound to him. Now, Jerome Powell did push back on the idea that inflation is not beaten. He said, we think we'll get to that 2% target, or he said we will get to that 2% target eventually. But it's unclear as to whether or not how soon they're going to be able to rate cut, or how they're just staying data dependent. We've heard that over and over. But the market liked the idea that the next move from the Fed, Jerome Powell said confidently that he does not think it's going to be a rate hike. He thinks it's going to be a rate cut. Market celebrated that. So from the antics and the data last week, we have a justified move lower in the dollar index, in my opinion. So that does not mean that this is just a straight up buy the dip right now because this is out of price. I think that there's a good valid reason for why the dollar index came down. With all that to say, am I still a dollar bull? Well, relative to peers, I still think the dollar looks more attractive than other currencies.
Market analysis, free trading courses, Edgefinder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
What I mean by that is I still think that the ECB, if we take a look at inflation data for just a moment together, let's pull this chart up. Yep, we got our inflation data pulled up here. Take a look at the USD versus, European counterparts. And Jerome Powell made mention directly to some of our, Western allies and what he thinks. He thinks that they may look to cut rates sooner than the US due to slower growth than the US, which has had really, really strong growth. Now, advanced GDP numbers came out much lighter than forecast. So perhaps that challenge to the dollar is somewhat valid. But what we can see here is that inflation does seem to be trending down overall. But the light blue here, or I guess the darker blue, I don't know. The teal color is Canada. The darker blue is the US. What you'll notice about the US is that inflation has stayed kind of stubborn. Meanwhile, take a look at, the UK and Euro, or European Union. You can see that they're trending still down. So it's looking like they may cut rates sooner, which weakens their currency relative to the dollar. So I still have a preference to be bullish dollar against other currencies, but I like gold to the long side. Long story short, on Friday, I took a buy on gold. Here's my GLD position currently. We are floating about $1,800 on this trade. I bought a support level. It looked good, went long, and this is the current trade that I'm in. Why did I do this? Well, I'll show you. We go to the system, punch out GLD. What does XAU USD say for us? A bullish reading. COT data came in strong, so that's a positive, right? Institutional money seems to be supporting gold. We'll talk about COT in just a moment. So we tagged a level of support on gold. I went long. If we I've got a pretty tight stop on this one. If price were to break this level, I'm going to go ahead and stop out. I'm floating about a 1-to-1. And my thought process here is that if we can get a break through these levels, then excellent. I'll look to trail a stop and try and let that trade run. So far, it's off to a good start, but it's too early to tell. We don't have a ton of economic data coming out this week. It's not really as heavy of a week, but you do still have some tech earnings, I believe. Well, do we? I don't even know if we have any big earnings this week. I know May 22nd is NVIDIA. That's probably one of the bigger earnings. Oh, wow. We've jumped up to 73 viewers on Twitter. What's up, guys? Thank you very much for hanging out with me. There's not a feature on Twitter where you can chat, is there? I'm so newbie when it comes to Twitter. Okay, wait. So you can comment below the video. And I hearted EDAS cap. Says Nick, the best to ever do it. Hey, I appreciate that. That's very nice of you. I liked your comment. I guess there's not like a live stream chat on Twitter. They should totally add that. Anyways, let's talk S&P for a moment. S&P is looking really strong here. I can't lie. This looks really impressive. What we're seeing here is we're seeing the reaction, the post NFP follow through, it seems like. So on Friday, the market really cheered the jobs data coming in a little bit light, which sounds weird, but it's because that might give the Fed some room to look to cut rates. If the labor market does, now there's a fine line here. The market wants to see the labor market cool down. It doesn't want to see it come to a grinding halt. A grinding halt means the economy's falling apart. We don't want that. We just want a chill labor market, not a raging one like we've had in some of the past years. In terms of the yen, what's the latest? I know there's been so much drama about it. I've been kind of out of the loop with Ministry of Finance. Are they going to clearly there was a big reaction up in for the dollar yen. I think it was 160 area. Is that right?
Yeah.
Yeah, big
Probably.
reaction around 160. What do you think with the Ministry of Finance, Bank of Japan? Are they going to do more about this? Are they going to hold it here, or is that just another pipe dream?
Lovely question. By the way, I think they have spent because we can see in their data that they have spent around 6 trillion yen on this thing so far. That's estimated, not official numbers. Are they going to continue? Yes, they're going to continue. if we go rapidly back up again. So it's up to the market now to just slowly just go higher. But they're not out of the market. I think they're pretty fine, okay now. What I think that they're really liking is weakness in the dollar. So that's great. But they are still there. They're not done. But it all depends on the movement going forward. And then they said on Friday, they're like, we don't like a lot of fluctuations in the market, like now up to 160 and now down to 52. 152 is not great for an economy.
Yeah, it'll be interesting to see where those yen pairs go. They've been so volatile recently. And as you mentioned, the theme for these pairs seems to be these big violent drops and then a grind back slowly higher. And even though it's slow, these are still significant moves. You're talking about from the bottom here to the top, that's like, almost 2,000 pips. That's an incredible overall move. So, if you're a dollar bull, perhaps you're watching this one, but you've mentioned specifically like the Australian dollar against the yen. I also need to respond to this donation. Benjamin, thank you so much for the 5 New Zealand dollars. Oil's jumping because Saudi jumped up prices for most regions. Gaza tensions are up with possible ground invasion on the way, and gold is up for that too. Benjamin, thank you very much for the donation to the stream. We appreciate that. And thanks again for keeping us up to date with what is going on. Ivan, what's the stock market is another one that we got to talk about. Stock market's breaking out, and I want to think back on that jobs data that we got on Friday. Is this, whether you're trading stocks, whether you're trading gold, whether you're trading the dollar, whether you're trading pairs, is this what the Fed wanted to see? This jobs data come down. I mentioned this earlier that I added this cute little chart here. Hold on, let me find it. If I go labor market data, NFP, scroll down here, we missed by 63,000 jobs in comparison to the forecasted data. That's after a streak of 5 hotter than expected prints. But Ivan, last time we talked about this, we said on Friday that November, we also saw something similar. We saw a blip, but the difference maybe here is this is the biggest miss from forecasts that we've had in over a year. So I don't know. What are your thoughts on the jobs data on Friday? Is that what the Fed wanted to see?
I can't speak for Jerome Powell, but what I want to say is I think your approach needs to be a bit different. What did the market want to see or need to see and position themselves to see? Like, what would their eyes want to see? Their eyes want to see a weaker NFP. And they waited for that for a very long time. And they finally got it smack that market in whatever the direction was. I think so. Another very key point to trading is what is the market setting themselves up for? Either failure or success. And sometimes they're very wrong. They have been very wrong for some time. And now finally they were getting something at least right. Is this what Powell wanted? I think Powell was seeing this a year ago. The labor market has been very strong for so long, even though with inflation coming lower, labor market has been untouched, basically, which is very against every economic theory that is out there. Lower prices, higher employment, because why would lower prices go lower? Because we are out of business. We are losing jobs because people don't have money anymore. So the job market has been very resilient. Now, it's one reading. One below 200. We have always above 200. I think the average is 280. So if this is going to continue, it's going to be a very remarkable time in our era. But if it's just 1 point, okay, it was fun as long as it lasted.
Yeah, no, I'm with you. I think what we really want to see in terms of if you're somebody who is hoping for rate cuts or you're looking for a weaker dollar, this is one print. And again, although it is the biggest, lower than expected outcome in a long time, it still could be a one-off print before we still see strong jobs data. So we have to be, this is 1 point. Now, to be fair, though, we could also couple this with a couple other indicators that the market liked. Manufacturing and services PMI came in light. Now, the market it does and it doesn't like this. On one hand, from the inflation story, it likes this because a slowdown in, the expectations from purchasing managers, that's a good thing for the inflation story, because that means less hiring, that means, less spending, less durable good purchases, that stuff helps the inflation story. But at the same time, too much slowdown in the economy is never a really great thing for stocks and for the market either. So I think if you're isolating it to the dollar story, this was a lot of weakness for the dollar. But for the stock market's just cheering in the short term for the idea, rate cuts are coming. And we saw the NASDAQ really rip on Friday. And some follow through here today so far. Very, very interesting. Again, we have another donation. My goodness, you guys are being generous today. You don't have to donate to the stream. In fact, I ask you, don't donate to the stream. Hit the thumbs up button, follow our guests, subscribe to the channel. All those things are free and they're a great way to support without paying us money. We do appreciate the donations. But again, the best thing you could do would follow Ivan, follow A1 Trading, follow Trader Nick. Just follow along with us. Come back and hang out with us each day. That's the biggest thing you could do. I wanted to press the like button many times, but unfortunately, I can only press once. Thank you so much for the €5 there, my friend. I appreciate that. Again, we're going to directly, we just bought another microphone for the other room. So, these donations, they'll go right back into making the stream better. We also upped our stream quality. So we're trying to make the show better each and every day by bringing on wonderful people like Ivan. So Ivan, next one. What about gold? What do you think on gold here today? Is it finding a low here, or is this just a bounce?
I want to congratulate you on that trade, by the way.
Thank you. It's starting
that
okay.
Takes some, it takes some courage. All the other B word, but it is. Congratulations for that, and almost no drawback, or.
Yeah, minimal. It went against me just briefly, but it's looking okay so far. But Ivan, the thing that with gold is it's such a violent mover. By the end of the day, it could be back down at the bottom. It could be, doubled this movement here today. So I think it's a little too early to call. I mentioned earlier, my plan with this is just to simply take my stop loss and just trim my risk a little bit and just see what happens with this going forward. But I think the weaker economic data, advanced GDP, PMI data, that both in the services and manufacturing came in light, and the opportunity for Jerome Powell to be hawkish, but he chose not to. He really was not incredibly hawkish like the market thought he might be. So to me, I think the risk to reward for gold is better on the long side, and we'll see if I'm right. I don't know.
So while we're talking, I have been thinking about a bit. The question that you ask yourself, you have to speak Mandarin for that answer. I think there are a lot of the answers are in the Chinese market. I've seen that the Chinese stock indices has gone a bit higher lately. All good and great, but they seem to be the ones that really is kicking gold higher. What are we now? We are in May. Is there any demand for gold around now this time of year? Supply and demand, seasonality, not really. But technically, you are at the low. I think that this is what I want to see normally. I want to see 2 higher highs. I've got one. I need a second one. So before I can kind of jump in, I will be late, but that's kind of part of my risk analysis. I like it.
Yeah, and I just wanted to pull up the chart while you mentioned seasonality for gold here. Seasonality, not particularly great time of the year. In fact, some of the bullishness has happened as seasonality kind of forecasted for during the first quarter of the year. Again, this blue chart is the 10-year historical average price performance of gold. We saw, several, pushes higher here in the early parts of 2024 and at the end of 2023. You really don't have a huge seasonal decisiveness going forward. Wow, we got another donation. My goodness. Stop donating, guys. Really, I do appreciate it, but save up the money, buy a copy of the Edge Finder, or buy a one-on-one mentorship with Ivan. I'm telling you, save your money, appreciate the donations, but buy something from us. I'm telling you, it's worth it, and you'll get a lot more out of it. Appreciate the donation though, Burns. Thanks so much. I purchased the Edge Finder. I'm curious, which broker do you use to get your retail sentiment data? So we actually use multiple. Lots of different brokerages report their retail sentiment, but we have an internal system that pulls all that data in and then calculates and displays the aggregate. So there's your answer. Okay, so Ivan, one other question for you. On Friday, you talked about pound New Zealand. You talked about, I believe, pound Aussie. Those were some of the trades that you were looking at. Do you have those trades on, or are you looking to add any trades to those?
No, as I was sad because I was stopped out on Friday, because of that horrific fall.
Yeah,
from the top.
Wow, what a drop.
So I'm like, dude, this is not necessarily bearish, but where is the integrity? Where is the core? Like we just went out, we just fell out the sky. So I want to see something to similarities of over here. So where are we now? We are probably somewhere in this scenario, kind of making the first high, but not really great. Technicals. So seasonality still stays, still stands by itself, but no, everything just went quack on Friday, and now everything is just I don't know what to do even. I can't even. Nah, I can't look. This is just the first bottom, and I need to buy up there. So I'm way too early.
Staying patient. Fair enough. Nothing wrong with that. I think after such a big move, I wouldn't be shocked if you do see some still sellers in the area. But as you mentioned, perhaps if you start to see some higher lows, higher highs, start to see a reversal, maybe that's what you wait for first. I think maybe you could make the same argument for the yen crosses that we talked about earlier. With such a violent drop, we've seen this long wick off the bottom, but perhaps the question is, can you start to see, a formation of an uptrend again? I don't know. Is that what you're thinking too?
Yeah, so that's where I am. So I'm very pragmatic about what I want to do. I want to have a bottom. I don't like this massive drops. I guess they're massive, but I don't like these drops out of a sudden. Sure. That's not where I have trained. That's not where I have backtested. That's not what I have practiced. So that's kind of out of my scope. Then I leave and I'm like, hey, my hands are off the table. But now we're starting to, have a decent, some decent price action again. I just want to defend you about the retail sentiment, because there's no central place for retail sentiment.
Yes.
There's many different liquidity providers. I think there are 7 major ones if you really calculate. So there is no single one as you have in the stock market, as you have one exchange. So yeah.
Yes, that's correct. That's exactly right. We've got so many different brokerages, so many different places that report their client positioning. There's not a centralized one singular, like the New York Stock Exchange or the NASDAQ. These are companies that have all the data in one place. It's not really the same thing for FX. It's a less regulated, less centralized exchange. So
did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.